Welcome back to my YouTube channel. My name is Forex Doctor. I am a Forex trader and I've been trading professionally for 3 years now. I am making this video on Sunday, 17th of December 2023 at about 9 a.m. So this video is revealing my secret Fibonacci strategy that I use to swing trade and to trade the market, the Forex market successfully. So stay tuned and learn. You all know I start my analysis from the monthly time frame. As from my previous videos, I always start my analysis from the monthly time frame. So on the monthly time frame, you can see that this market is a bullish market. The market failed to break this support here, this level, multiple times. So we have rejected again, which I predicted last month, and this is a new candle, monthly candle. So I'm expecting this market to test this previous high here and even break beyond it, but let's not get ahead of ourselves. Let's get here. But from what I'm seeing, this market is going to reach this previous high. So let's also go down to our weekly time frame and see what is happening. So weekly time frame, this is the price action here. So we have broken this level as I predicted on my previous video. You can check my YouTube channel and you can see you will see the previous video. So this market is heading for this high. So whether it's going to take out this high, I don't know. So, but I know the market is heading for this high. It is clear. You can all see the market is heading for this high. So, let us go down to the daily and look for trading opportunities. How can we trade this market? So, if you come here, check my previous video on my channel. I made a video when the market was here, after this break of structure, before the market even broke this trend line. So, ideally, we were supposed to wait for the market to break this trend line, break out of this downward trend line. So we're seeing having a downward movement. Yeah, the complete analysis is on my channel. Check my previous video. So I made, after I had this break of structure, I predicted, I entered for a buy. The market stopped me out. I still entered and the market went up. So when the market got here, I also made another video and predicted that we're going to have a sell. So I told people to sell right up to the Fibonacci, take your Fibonacci and sell up to that, which the market did. I also predicted the market was going to buy and break. But I told people that my community that nobody should take a long-term trade unless we see this market break out of this level. Then can we take trades and hold for long term. So as you can see, the market is heading for this high here. So how do we trade this market? How do we trade the market? Now, if you look at what has been happening since, Fibonacci is my secret Fibonacci strategy that I used to trade this. I'm using to trade this market since November. I'll be revealing it to you, so just stay tuned and learn. Thank you very much. So we see that after we had this impulsive move, we had a retracement. And if you take your Fibonacci from here, how do we use Fibonacci? Look at these candles here, this bullish candle, the last bearish candle, this red candle. So that's where we take our Fibonacci from this low here to this high. To this high. Thank you to this. So we can see that. You can see that here. Yes, to this side. So we can see that the market clearly respected our 60% Fibonacci. You can see the 50 which held. So, and since we know that it's been a break of structure, so it means we are looking for buys. So the market bought off this 60% Fibonacci level. Now it broke above this level. Now, what do we know about the break and retest strategy? Once the market breaks out of a level that has been holding it previously, or support or resistance, some people call it support, some people call it levels. What are we expecting the market to do? The market to come and retest. So this is what it did. The market retested and rejected that level. So how again were we supposed to trade that? Just simply take our impulse from this low. Take our impulse from this Fibonacci from this low here to this high. Here again we see that the market respected what the 0.38 Fibonacci level, and we bought off this level. How do we trade again? You see it had another retracement here. How do we trade that again? We take our Fibonacci again from this high, from this low to this high, and if we So all of this is on the daily time frame, please. If you go on the 4-hour time frame, you will see. But I don't use Fibonacci on the 4-hour time frame. I might use for other conditions where I use, but I always talk about the time frame that moves a trend. So in this time on this particular pair, the time frame that moves this trend is the daily time frame, because you can see higher highs and higher lows, higher highs and higher lows. If you go on the 4-hour time frame, you might not clearly see these higher highs and higher lows. It might be a little choppy. So what you want to do is to go to a time frame where you will be able to see these higher highs and higher lows. So you see that here you can't clearly see higher highs and higher lows. It is a little bit choppy. But if you go on the daily time frame, you can clearly see that our higher highs and higher lows. So that is the time frame that drives this trend. It is the daily time frame. So I'm using my Fibonacci on the daily time frame only. There's an instance where I'm going to use on the weekly time frame. That's when I saw the retracement on the weekly time frame. So I used my Fibonacci on the weekly. So we see that the market also respected here the 50% Fibonacci. You can see clearly the market respected the 50% Fibonacci here. So if we move on and bought off that level. So if you move on, we have another impulse from here to here. So now once we got from here, we had a double top. This doji on the daily, we had this bearish candle, we had another bullish candle. So when we had this bullish close, I knew the market was going for a deeper retracement. So what did I do? I simply moved to my weekly time frame. I moved to the weekly time frame and took my Fibonacci on the weekly time frame. I took my Fibonacci because I saw a double top. Now after my close, I saw it. So I came to the weekly and took my Fibonacci. And the Fibonacci I took from the weekly was from this level. After this bearish candle, the next was the bullish. So this was the low. Taking my Fibonacci from this low to this high. This was the high. Yes. So you can see clearly how the market clearly respected this 0.38 Fibonacci level. So when you go back to the 4-hour time frame, you see a lot of choppiness on the 4-hour time frame. A lot of people blew their accounts. A lot of traders were confused, don't know what was happening, didn't know what the market was going to sell. But I have my Fibonacci levels. I was so confident because I have my Fibonacci, my 0.38 Fibonacci level, 0.5. So I was expecting. I always these are the golden zones of Fibonacci: the 0.38%, the 0.5%, and the 0.61. So these are the TV zones. I was expecting the market to come back and buy off from. I know that this is an uptrend market. So now the other complex which I had for entering this trade at this point, which I bought from here, another point which I confluenced was this trend line. So if you go back to the daily, you can see our trend line coming down from here. So first touch on the trend line, second touch on the trend line, then we have another third touch on the trend. So this was an additional confirmation, an additional confluence, which also gave me a lot of confidence when entering this trade. So I entered here. So if I go back to the 4 hours time frame, you can see a lot of choppiness here. A lot of choppiness. The market was just ranging. So a lot of people didn't know if to buy or sell, but the market didn't break this. So I was still holding here and I entered here. Where did I put my stop loss? Stop loss below. So when I'm using Fibonacci, if I take a position on the 30% Fibonacci, where do I have my stop loss? I'm a swing trader, so my stop loss definitely is going to be below the 50%. So why do I put my stop loss below the 50%? I aim for what? The high. So this is the high. So if I take my Fibonacci from this low, my Fibonacci from the 30%, what am I aiming for? Where is my target? If I take my Fibonacci from the 30% or the 0.38%, my stop loss is below the 50%. If I take my Fibonacci if I take my entry from the 50%, my stop loss goes where? Below the 60%. So if I take my entry from the 60%, my stop loss goes below the 71%, but it's not showing on my Fibonacci because I rarely use it. But so the stop loss there was about 80-something pips. I'm targeting for this high, back to that high. So TP smashed by how many pips? I think this was about 206 pips. So It was a very, very simple trade. Now, the requirement for the entry is price action, which I cannot cover in this video. In this video, I'm talking only about Fibonacci. You can see that the Fibonacci is a very, very powerful tool. Very, very powerful. It gives you perfect entries, especially in the trending market. Fibonacci works so well in the trending market. Now, that was last week. So, how do we trade this pair from here? How do we go forward? How do we trade this pair from here? So, if you come down on the daily, come back to the daily, look at where the market is. So, my projection for this week, how do we trade this pair this week? This is where we are. So, we have already agreed that I've already seen that the market is coming to this high. So now, how do I enter this trade from here? I'm at this point. I'm talking to any trader watching this video. How do you trade this GBPUSD from now? Now, as I always do, I trade using Fibonacci. So I have this impulse from here. This is my impulse. So if I take my Fibonacci, I use only for Fibonacci, nothing else. If I take my Fibonacci from this low, this is the last bearish candle. So the lowest point after that, it is here. So take my Fibonacci from there to the high. This is the high here. This is the high. So these are the two. What are the zones I'm looking at? I'm looking at the 0.38%, the 0.5%, and the 0.6. Now, if I go down to the 4 hour, what am I looking at? I'm looking at price action. So the market is clearly at this 0.38%. Like I said, the market is there at this. So I don't look at price action on the 4 hour. I look at price action on the 4 hour, and I look at price action on lower time frames like 15 minutes time frame. No, I enter my trades on the 4 hour time frame based on price action on the 4 hour. So looking at this chart, I'll be paying close attention to this 0.5%. You can see this sellers came in here, this red candle here, this bearish candle here. So I'm expecting the market to come here and show rejection at this between this 0.5 and 0.6. So this is where I'm expecting the market to come to. I'm going to enter a buy here. So if I enter a buy position here, what will be my target? Back to the highs, the long position. So if my market comes here to this 50%, that's why I'll be entering the trade. 50% Fibonacci. Stop loss below. So I won't enter blindly. What I always do is I wait for candlestick patterns on the 4 hour, sometimes 1 hour, but I don't go to the 15-minute time frame. So candlestick patterns on the 4 hour time frame will give me my entry requirements, and so I'll make another video explaining my entry requirements. So now if I enter the market at this 50% Fibonacci, what will be my target? My target will be back to this high. So you see, on this trade I'll be risking 45 pips to make. That's a 1 to 3.3 risk to reward ratio to make 150 pips. So obviously the market is going to go beyond this level, but it is at this level where we move our stop loss to break. We will close half of our positions. I close half of my positions when the market gets to this level. Then I'll move my stop loss to break in and let the trade ride, because I'm expecting the market to buy right up to this point. Yes, there will be retracement, there will be minor retracement, but we are still going to be adding to our position. So how can we trade this market? So this week, what we're looking at is to get a bullish sell into this zone. These are our 50 and 0.6, 0.5 and 0.6. That's the 50 and 61% Fibonacci levels. Then we are going to enter our trade here or buy. So maybe the market might come to this trend line again to test this trend line again. That will give us an additional confidence again to go in. So we'll be watching price action, waiting for the market to get to this level in between these two zones, 0.5% and 0.6%. Then we're going in for a buy. So that is my projection for GBPUSD for this week. I wish you guys the best, and please make sure you like, share, and subscribe to my YouTube channel. Share these videos to your friends who are also traders. They can learn a lot from it. This is my secret Fibonacci strategy that I've been using to trade the market successfully for about 3 years now. And guys, I won't lie to you, this strategy works like magic. So hope you've been able to learn a lot from this. Thank you very much, and see you in the next video. Take care. Bye.